Sounds like the report did make you raise your eyebrows.
Yes, and I think it raises the question about whether the trade uncertainty was already having some impact on the economy, prior to the latest escalation as far as Mexico is concerned. This, came after the original tweets about China. And I do think it raises that question. Now, I don't think it answers the question, because while both the BLS and the ADP report were both very weak, some of the surveys, including non-manufacturing ISM employment, which is a pretty good survey, were actually very strong. So I don't think it's something that would lead you to, judge conclusively that things are weakening, but it definitely raises the question, raises the downside risks, I think.
So you don't see an emergency cut this weekend, as some had been toying with as an idea, but is June a possibility? I
think June is unlikely. I do think that they will want to see a little bit more information. June comes also before the G20 meeting. We have a lot of uncertainty even between now and Monday, but then right after the June meeting, you've got the G20. So, I think they certainly will change the guidance and the signals that they're sending, but I think a cut would still be a surprise.
The comments by Stanley Druckenmiller, I think, are key, and sort of this idea that the jobs report is basically lagging information. So much of the data is actually data that we've it's a reading that we've already seen take place. So when you have a Fed that says it's data dependent, if they make a decision to move in one direction or the other, by the time they do make that decision, are they behind the ball?
Well, I think it's only one input into the decision, and almost everything that we have is lagging to some degree, right? We're looking at things that have happened. Those are data points. Some are more up to date, some are less up to date. I would agree that the jobs numbers do get too much emphasis, I think, in markets. I don't think they're as informative about where the economy is and where it's going as people often think. So I'm very sympathetic to that general view, but I think if you use it as one input alongside a bunch of other indicators and what's happening in financial markets and what's happening in the news flow, then I think it makes sense to put some weight on all of that.
So you're talking what, industrial production, PCE, rail traffic, what else? What's on that list?
Well, the surveys for sure, so both the consumer and business surveys, and I think those are particularly useful at the moment when you have a potentially significant change in the outlook because of this big shift in tariff uncertainty. But I also am talking about financial conditions. Looking at what's going on in financial markets, while, as a policymaker, I don't think you should blindly follow certainly financial markets. You do have to take into account financial conditions, and you have to be very aware of what financial conditions are expecting. So one of the things that the Fed's going to have to look at is, on the one hand, we haven't seen that much of a tightening in financial conditions, but on the other hand, one of the reasons for that is that the bond market is pricing a substantial amount of cuts. And so they're going to have to basically decide, to what extent they view that as a reason to ratify expectations.
Jan, you mentioned this number may have shown at least some impact from the China trade dispute. Where do you see that, or where do you look for continued impact? Is it business investment, confidence? Does it spill over to the consumer in some way?
I think you would probably look more on the business side, so the hiring side, and the both the surveys and the hard data. And there's a split verdict, I think, at the moment. Investment for sure. The problem with the investment outlook is that we don't have a lot of great, very timely information. So if you're worried about looking in the rearview mirror, that would be a particular concern with respect to the investment numbers. Consumer, I think, could become more of an issue if we actually do see increases in tariffs the next round. If there is, an across-the-board tariff vis-a-vis China, that's going to have a much bigger impact on consumer prices. So far, it just hasn't been that big a deal yet.
What could have the bigger impact on the economy and, I guess, business and ultimately consumer sentiment? The uncertainty of not knowing how long the tariffs are going to be here, when they get implemented, what that looks like, or actually a permanent implementation of tariffs in which businesses could then start to pull the trigger and make the right investment decisions?
That's a great question, and I think how much of this increase in uncertainty can be reversed. It's a similar question. How much of this can be reversed by, say, shelving the Mexico tariffs, for example, and to what extent that then again changes the economic outlook and the risks in a more favorable direction. I think it's hard to know. I do think that if you see increases in tariffs, you're never really going to be that sure that this is the end of the road, right? So I would be a little bit cautious, I guess, about the idea that you go through with it and then you have the uncertainty out of the way, because you certainly have questions about what does China do in response, and what potentially are the next steps of escalation if things do continue to be more adverse. But it's a great question.